Okay, let's go ahead and get started. This is Jeff Scott. It is almost 3/8. It's 11:30 on 3/7. And this is my top-down review. Using a different computer today. I upgraded my home computer. Talk about a crazy computer. It's got a i9 10th generation, which I didn't think you could get those, but I've got one. All right, duplicate slideshow. All right, let's see if that's going to work. Well, we're okay. Excellent. On 6 monitors, it's working. I titled today, Will QE Immunize the Market Against Coronavirus? And to me, that's actually an interesting question because something happened at 3 o'clock. We'll look at it on the futures later. I was sitting on a plane. I was very short the market, and I scrambled to cover at least half my shorts in the last hour as something seems different. And I think Gil over the weekend called it QE, but Gil calls everything QE, but I happen to agree. Something happened in the market that changed things. This session is for educational purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments. I'm not affiliated with any software vendor or trading company, and the tools demonstrated are those that I use in my daily trading. And I've paid for all the tools. Trading involves risk. You alone are solely responsible for any investment decisions you make. Probably not going to be getting real aggressive in buys today, so I may not go deep into options. But I highly recommend that if you do options, that you get educated. They can really make you money fast, and they can lose you money fast. And there are some challenges. Again, I always like to thank the people I learned from. I call my style of trading Be Your Own Guru. Started with CanSlim, improved by Morales and Catcher. Ian Woodward really helped me a lot when he took the basic premises of CanSlim and improved them. George Lee, may rest in peace, recently deceased, great trader from Western Canada. John Person really taught me how to take the trades and how to make money. And my buddy Cigar down here from Superior Profits got some great tools as well. I own a lot of different programs. I need TradeStation and Thinkorswim. I've also been using Dr. K's tools as well as Cigar's tools. Here's the website for HGSI. Not a lot to tell you to do there except free 30-day trial, no credit card necessary, and investing strategies. You'll find hundreds of videos. Speaking of videos, for those that have purchased John Person's package for HGSI, you should get an email from me probably sometime Sunday. I'm going to do a webinar, closed webinar for the purchasers on Thursday afternoon. If you're on the fence, it gives you a few more days to stay on the fence before you buy it. It'll be recorded and shared with all the people that own the package. If I cover things that are not package dependent, I'll post those for the general users as well. Stock patterns are cyclical. Wow, what a couple of weeks we've had. Down 3,800 2 weeks ago, last week. Monday was awful. Tuesday was pretty good. Yeah, well, I got to keep track of my dates. Because Monday was great, Tuesday was awful, Wednesday was great, Thursday was kind of lousy, and Friday was lousy and got better. Bouncing all over the place. Clearly, it feels like we've moved into a stage 4, but you can go through that stage pretty quickly, and I'm going to show you some things that tell me a bounce is near. How big of a bounce remains to be seen. Since we talked last week, we were about to go into this stage 4. That meant I did bear call spreads, which means I sell the near call, buy a further out call to protect me, buy put, sell call, short stock, and contra ETFs. And I've done all of those over the last week or so. My best ones were shorting TQQQ at about 100 and buying SVXY puts when it was about 50-ish. I can go look at my count sitting here on my phone. I can tell you exactly what it was when I bought it. Yeah, I'm up 7. It was about $50. That was a great trade. I'm out half. I bought some FAZ and others as well. Friday, despite the rapid finish, it's still a pretty weak day with a sea of red everywhere. Major markets tell the story. I hate to do this here. I'm so afraid that I'm screwed up something. All right. And can't even tell if we're okay. I'm not sure what screen I'm even broadcasting on. I guess I'm still on the screen here, aren't I? All right, I think we're okay. Let's take a look. I hate doing these things twice. Something tells me today that's going to be one of them. All right. Now let's open this up. Come on. I will get this sorted out. There we go. Bring everything back to where it belongs. Don't want to see that one. Let's take a look at this one. I'm glad I've experienced. Okay, that's not the one I want. We're getting there. Let me bring up the other. All right, here we go. This should be daily charts. And as people have been here before know, I like to look at the future. Sorry for that hiccup. I guess whenever I try new machines, I'm going to expect something. So on the NASDAQ, or the S&P futures, you can see how long of a run we've had. Highs of the year set, and then the market rolled over. Interestingly, the on-balance volume, which I know that John Person doesn't, he's got some new indicators for that are much more sensitive, but it rolled over at the top as well. And we're struggling to get over this 200-day moving average. This is a daily E-mini futures. Really going sideways here, and I guess one could almost make the argument that we are in a, let's see. Are we in a box here? I don't want to do that. But are we setting up a consolidation here, or are we looking at a bottom? If we look at the NASDAQ futures, the difference is we're above the 200, certainly a more bullish. We've got the 17 crossing below the 50. On the Dow futures, rollover, struggling to get back above the 200. Not exactly what I call a bullish pattern that says we're going to reverse tomorrow. The Russell futures will look very similar. What's pretty impressive, and I'm going to come back to the VIX later, is the VIX really spiked. But let's look at let's take it down to an hourly chart. Actually, let's look at a 15-minute chart. That's not sure what I wanted to show, is it? Well, you can see in 2 bars that we moved from about 40 down to 32, a 20% drop. And this is where I made my comment earlier about potential, did QE come into the market or something, because there was a very rapid change, and you could see the topping tail there. And the dollar remains weak with the rates falling in the toilet. So it'll be interesting to see if we can bounce out of this funk very quickly or not. So go back to the PowerPoint, and I'm just going to leave it in its current mode, I think. That way I don't have to worry about my screens popping up all over. I'm learning little issues about this computer setup as I go. All right. On the weeklies, you can see the big weekly bars that have sold off. And notice on the 200-day weekly, 200 period weekly, which is about 1,000 day chart. We pierced it on the Russell. Interesting. Rates fall to new lows and the spread widens. Let me just do this. I don't like that. The pictures must show. Slide. Okay. You can see the rates have fallen on both the 10-year and the 30. These are new lows on rates. Great time to refinance school debt in case we don't get Bernie. And as you see in the next chart, or you can't see very well, this little line going up is the yield curve, or the spread between the 2 and the 10 has actually increased. AD lines on both the small stocks and the large stocks have rolled over with the indexes. And you can see on the NYSE how it dropped. Transports have been extremely weak, although they did come back some at the end of day Friday. And this is the TLT bonds, which have been very strong with these weak rates. Is this market oversold? Sure, if you look stocks above the 200, stocks above the 40. But as you can see to the left, they can get lower. If I look at the 3-month new high, new low, we actually bounced last week as we said we would. We're not quite to the bottom, but this looks like something that, if it isn't already reversing, is probably within a day or two of a reversal. The daily McClellan, look how we spiked down here this week on the McClellan oscillator, something that often leads to reversals. We saw it here. We saw it here as well with a big reversal, so there's a sign there. If I look at the weekly, again, you could see that big reversal there. On the buckets, more reasons to anticipate a reversal. This is what we saw at the end of last week, where 97% of the stocks were below the midline of their Bollinger Bands, and over 70% were below the lower band. Not quite as extended to the downside here as we've come off of it. So we could have a day or two of weakness before the bounce, but there's a bounce coming. Hindi zone, new lows on the March. If you can see, the number of new lows on the NASDAQ and on the NYSE are just phenomenal as the stock market is getting extremely oversold. Now, the interesting thing on the market tone, because we had those 2 positive days, we had a line of Hindis, and we actually converted the market to more of a neutral stance. Now, you notice those brown and yellow to the right. That's just showing you how much volatility we're having. Unusual to see that. From a sector strength, it's about utilities, staples, real estate, the more defensive sectors popped up. If I look at the canaries in the coal mine, this artificial index, you could see just like the markets, Friday, Thursday, Wednesday, Tuesday, Monday. So we pulled back, but we're still above last week's low. Does that mean we have higher lows and a reversal? Maybe. We'll have to see what this week will bring. I called it higher low after a volatile week, and the same thing on the JAS index, the leaders of late January, the same type of a pattern. Know your news and earnings. News didn't look like it's that big of a deal from economic reports. My expectation is that we're going to see talk coming from the Hill about stimulus, certainly helping out those industries that are getting clobbered, cruises, hotels, airlines. What about small businesses adjacent to those areas where the number of workers and the number of customers is down because of layoffs and because of people not using them? I think you're going to hear about that. There's also been a lot of pressure as we go into March on the Fed, perhaps to cut rates again, which can't be great for banks. Certainly would be good if you're worrying about potentially preventing a, what's the word I'm thinking of, recession. But we'll see how well low rates or negative rates work, and they haven't worked that well for the Europeans. You will see, I think, more and more talk of quantitative easing. Just when you thought it was safe to go outside, you can see to the right that you have a ton of earnings announcements this week. Most of the major stocks that I own, earnings have come and gone. This has not been a time to be a hero when it comes to earnings. Missed earnings are being punished. It's a judgment call to hold stocks over earnings date. It's bad judgment to not know when your stock's earnings date is scheduled. Remember, there are numerous things that can happen at earnings, and all it takes is one to be bad. This quarter's earnings and revenue compared to 4 quarters ago. This year's earnings and revenue projections. Next quarter earnings and revenue projection. Same store sales. impact of coronavirus. It's a great time if the stock's going to come down to get the bad news out. So be careful with your earnings reports. Market thoughts. We ended a volatile week on a lower note, closing just above Monday lows. You can see year to dates that the markets are down considerably, but less than 10% except for the Russell. Fears of coronavirus impact on markets and economy are in focus, while rate cuts in QE, if that's what it was on Friday, at least temporarily stop the bleeding. News likely will continue to batter the markets as the number of cases in the U.S. likely explodes while we gain some clarity in the seriousness of infection. More primaries on the horizon will impact on markets as well. I think it's going to be very interesting to see how the news flow around coronavirus flows. Not having the CNBC and talking heads every day telling you about the world ending seemed to make me feel like the market's stabilizing over the weekend. But I did cancel my trip to New York for the Traders Expo as my wife and I decided it wasn't worth the risk. We've seen emergencies called in multiple states, and it remains to be seen if the market's going to have to digest some bad news on Monday. Stocks seem to be following interest rates. Can a stimulus or further rate cut keep rates above zero? We seem to be close to a bounce. We should be prepared for a rally, but we could have further drawdown and volatility beforehand. Now, to prepare for that, I took off half my contra positions late Friday, but left in place my puts on the larger holdings. I started to nibble on some longs, but want to be careful as there can still be more downside. I will watch the market and shift to more bullish stance if and when I get my signals. China might give us a clue. New cases have leveled off. Last week we talked about some of the bulk shippers starting to move, and the markets in China hit multi-year highs on Friday. That's got to be interesting as well. What is the VIX telling us on our markets? In the works and words of my good friend, the late George Lee, when the VIX is high, it's time to buy. Well, I took the following two pictures from Mark Chavaco's website, ccmmarketmodel.com. These actually came out of a recent video he did. And he talked about volatility spikes. As you could see on this chart, going back to 1990, a daily chart of the volatility index, you notice there's some very well-defined spikes, and the years are labeling when those spikes occurred. Now, some of those spikes, specifically the 2002 spike and the 2008 spike, occurred in a bear market. So if you had access to this slide and you know that we're having a spike similar to what we see to the left, then we could ask the question, or Mark Chavaco did a great job of answering the question of what does this mean going forward. So here's 10 episodes of a volatility spike, similar to what we saw on Friday. It shows you that where his arrow was when I took this picture. Here's Chavaco Capital. Here's their website. Highly recommend you follow him, get his videos, etc. Give him some money. You could see that the market averaged further decrease, but a modest decrease, less than 4%. In fact, if you look here, there were two worse than 4%, three actually, it was 4.5%, but the two larger drawdowns occurred in the setting of a bear market. Maybe you don't know a bear market until you get there, but I don't think we're in a bear market necessarily. So the others are very modest. If you look at a month later, even in a bear market, you were substantially higher, averaging about 6%. If you look at 6 months later, again, for the most part, you are higher. There are a smattering of negatives, and one that was significantly bad in 2001, which took you right into the bear market of 2002. So nothing's guaranteed, yet if you look in the last two columns, there was a peak that occurred, and you can see the gain to that peak. So what's the message here? The message is to go to ccmmarketmodel.com, go to YouTube and type in CCM and get his movies for yourself. But don't forget the markets can go up from here. We've been here before, and the more I know about coronavirus, and I'm a physician, although I'm not currently actively practicing, This does feel like a flu, perhaps easier transmitted. We don't have vaccines. We don't have any specific therapy for it. But for the vast majority of people, 80% or more, they won't even know they have anything else but the flu. And a small number will need to be hospitalized, and probably, except for the very elderly, very few people will die. So if you're old, if you're immune compromised, there's much more risk. So let's go and take a look at my top-down review. All right. So let's start by going into my trade station. All right. And I wanted to specifically look at this one here. Yes. This is my market force and divergence. I wonder where this thing tops. Well, we'll find out when we're done. If we look at the E-mini, oh, don't tell me. Oh, never mind. All right, so these are auto trend lines. I think these are driven by Cigar, written by Cigar. You can see we've pulled back to what is felt to be my support. We bounced off of it several times. We had a new person buy signal come in. We're still in a weekly sell, but we're on support there, and a monthly sell as well. Notice that the high jump bar is no longer an issue. The market catcher shows you how bad the force is, but it's starting to improve. So perhaps we can see signs here of a market that's getting tired of falling. If we look at the Dow futures, similar pattern. A new buy signal came in this week, still on a weekly buy. No longer concerned about the high jump. If I look at the NASDAQ futures, again, pulling right down into pre-drawn support on the NASDAQ daily and weekly. Weekly's in a sell like the others. Daily's in a buy. Now, you've also got resistance here, and will it continue to work down this line of resistance? We will see. If I look at the Russell 2000 futures, it's continued to fall and no buy signal. So clearly looking at this, you can see weakness in the futures, but we're at points where reversals might be coming. Okay, that's cool. Well, anything else I want to show you in TradeStation? Yes, there is. Now we got to move this thing out of the way. I don't know why we have so many of those. That's strange. I got both of those. All right. Let's look at the Commitment of Traders report. Now, there are a lot of different ways to interpret this report. All I want to look at is the blue, the yellow, and the curve of the index, in this case the NASDAQ futures. When you see the blue above the zero line, you have buying by the professionals. When you see the yellow above the line, you have buying by us, the small traders. What you see right now, and this is data that was through Tuesday, came out on Thursday, is that at least by that point in the week, you still have net long buying by the professionals, and of course, us are short. If I look at the E-minis, hope I didn't screw that up. Let's see. I look at the E-minis, you can see it's not nearly as good looking. That on the S&Ps, We've started buying, but there's much less buying by the professionals. So that's more bothersome. So a sort of a disjunction between the small stocks and the large stocks. I don't think this will go back far enough. But if I showed you 2008, 2009, you would see the impact of a bear market where the yellow is above and the blue gets deeply below. So we have a little bit of a confusion here as well. Where on the professionals, they seem to still be long on the NASDAQ, but not necessarily so on the E-minis. Let me just verify that. Let's see if I can change it here. I should be able to change it in here. NQ, hit that. Yep, still looks the same way. All right. Let's go take a look at Hgsi, since that's kind of what I'm supposed to be doing here. Move some things out of the way. So in Hgsi, I like to start with the market analyzer. Now, I don't update it very often. I know Ron has updated it multiple times, so if yours looks different than mine, it's because you've got one that's more recently updated. I like using the top-down view, and you could see here bonds and gold and volatility up at the top, energy and small stocks on the bottom, the S&P 500 in the middle. All right, so let's set this up. So S&P 500, if I look at it, here was the low of last week. Here's the low of this week. You can see we've got higher lows that should be considered bullish. Where do we go from here? Talked about this before. There's lots of potential outcomes. I could be a bull and say, we're done, we're going up to the moon. I'm not that guy. I can be very bearish and say, we're breaking down, we're going to go down to 5 years ago. I'm not that guy either. But I could be the guy that says, until proven otherwise, we're probably in a box. I know Dan Fitzpatrick's another fan of boxes like I am. And I think that for now, I think we're going to be in this area, which means we're in the lower part of the box, which means what do I expect to happen? I don't know what I expect. I want to see what the market does, but it wouldn't I don't want that. Don't want that. It would not totally surprise me to see the market rally over the next couple of days. But the real question is going to be is we got that 200 coming down here, and can we break, or the 50 rather, can we break that, or are we going to just go sideways for a longer period of time? Time will tell. A V bottom means we're going up here. I just don't see that. It could happen. I'm prepared for it. Maybe we don't get much lower, but as a sideways move in the cards, I think you have to be prepared for all the scenarios, and I will be, and I'll watch the market at its open and decide whether I unload the rest of my protection. So S&P looks like it's, well, you see what it's doing. Down, sitting on the 200. The Dow Jones Industrial also sitting down below its 200. A little bit more damage has been done here. Notice the PMC underperforming the S&P. And now if you look at the NASDAQ, see a little different picture. It still bounced off the 200 twice. PMC is above. That's a little bit more bullish feeling. But if the market goes down, it's just going to go down as well. And then if I want to look at something that's been weaker over a period of time, if I look at the Russell, you can see Russell with multiple bingos. Sometimes the bingos are a sign that perhaps the market is in the baby out with the bathwater mode. A couple of things I like to follow. The 50, the Innovative IBD. This is a ETF that's actively managed in and out with IBD 50 stocks. Kind of looks a lot like the Dow, and the Russell struggling below the 200-day moving average. Now I ask you, if investors.com, who's great at picking stocks, and their index of stocks that they pick is struggling, what makes you think ours can be any better? Certainly not if we're in the same type of stocks. And I know it's right in front of me. The momentum one is right here. And the momentum stocks look kind of like the Nifty 50, the IBD 50. The dollar we looked at before and saw that it was weak. Let's find the dollar here. And we can see the dollar has broken down. It too has some bingos forming, which is a sign of baby with the bathwater. Interestingly, the PMC shows there's a lot of more relative strength at this bottom than there was at the prior bottom. So maybe the dollar's getting ready for a rebound. That might actually be a positive thing for the markets. If the dollar's weak, bonds are strong, and there you have a breakaway gap. Is that an exhaustion gap? Time will tell. Huge volume gap. Hopefully that's an exhaustion gap. Gold miners have struggled compared to gold, but they started moving a little bit last week. Let's find gold and silver. Here's gold itself. Weak dollar, strong gold. And silver somewhere down here. Silver has both industrial uses as well, and it's struggling behind the other two. And then lastly, we've looked at the VIX several times just to show you the VIX on Hgsi. And if that's not a shooting star, I don't know what a shooting star is. Gapped up from the prior close near the lows of the day. That could mean that we've got a short-term reversal in play. It also shows you why it's so difficult to play the VIX. Can we go higher? Absolutely. Can this market go lower? Absolutely. But what I'm seeing here is a market that's trying to put a line in the sand and bounce. Will it be Monday, Tuesday, Wednesday? Maybe we sell off further Monday and set up a turnaround Tuesday. Time will tell. I think it's going to be a lot dependent upon what we hear about coronavirus, how many states, how many deaths, and what the response and the banter is about them. What else do I want to show you? 5-day price changes. Let's look at the major markets here for just a second. The NASDAQ composite was up 0.1% for the last 5 days, although it was down 1.9%. The S&P was up 0.6, but down 1.7 on Friday. So that tells you that the markets really didn't do much the past week, except for gold miners, which were up 12%, bonds up 7%, utilities up, gold was up, VIX was up. A very defensive-looking pattern there. If you look at how much off the 52-week highs we are, oil was off 10% last week. Was off 7.5% last week. It's 37% off its 52-week highs. The volatility index is 23% off the highs, probably the highs shown earlier in the day on Friday. The Russell 2000, 15%. We get to the ones that we care most about. The Dow Jones Industrials, 12% off its highs. The S&P is 12.4% off its highs. Interesting. Very interesting. All right. Now, if we look at industry groups, shocker alert. Let me go up here. How many industry groups do you think were positive this week? And the answer is 2-day force up. We have one positive group, which was mass merchants, led by Dollar General, which doesn't look like much, but on Friday it had a big volume day and closed up and got above its 50-day moving average. And then Walmart, which is probably my favorite stock of the week, or one of them, as you can see here. Walmart setting up right on its 50 as well. Mobile breakout from a squeeze. Strong PMC. We'll talk more about Walmart. The rest are below the index, so I don't spend any time with them. If I look at 2-day down, you'll see a different picture. Because the market's been down so much, these are the ones that flipped over the last couple of days. Pharma, biotech, medical devices. Maybe that says the aura around coronavirus is improving. If I look at 5-day down, you'll see stocks that have been down for a longer period of time. You've got 88 groups, and that's interesting. 5-day up, we have just 5. So if I was doing a top-down review, I'm done. Obviously, that's not very satisfying. I do have a buy watch list. Before I get there, I just want to show you what I do to supplement. I go into, well, first thing I do is I go to all securities here. And then I'm going to set this here at, with no, just the default view, and I'm going to go, okay. I've got 8,886 securities. Now, I want to filter that so I can get down to stocks that are of size and volume that I'm interested in trading. So here is a list of 2821. So instead of looking at all securities, I'm going to look at this list here. If I'm looking at this list, then I'm going to go into why am I so excited about the John Person package? It's probably not because of the charting, because frankly, I could chart some of it on TradeStation or Thinkorswim. I'm excited about the John Person package because I could do what I'm doing here. I can look at how many stocks had a daily buy. Gosh, there were only 17 new buys, John Person PPS buys in my universe. Now, this is a trend reversal signal. I can filter that reversal signal and look at those that are near weekly support. Advanced dispose, that's a buyout. That's a preferred, so we're not even going to look at it. How about both a daily buy and a weekly buy? I didn't think about Hgsi's General Stores, and the volume's a little bit low. But here's an uptrend pullback to the 50, and I've got a new buy signal, Pocket Pivot, Kahuna, and very strong Person Market Catcher. So that one is actually not unreasonable to look at. I could go back up here, and I could go, how about daily trilogy buy? There's that one that's a buyout anymore. It's not worth looking at. New daily HCDs, there were 65. HCDs, a new PBS buy signal. Here's that same Hgsi's General again in that preferred. Weekly buy, I have 29. That's not very many. How about a weekly HCD and a PBS buy signal within the last 2 days? And I often find good stocks here. Healthcare Trust, nice little uptrend, pays a 3.7% dividend. Strong PMC. Look at the growth rate here. All right, you may see that again. Here's a utility. Kind of loose there in CME Group, but it's going to be hard to find great looking stocks in this market, I'm afraid. At least until it settles down. I don't know who Counterpath is. It's got plenty of volume. It doesn't make any money. Pull back to the 50. Mobile breakout from a squeeze. New person buy signal in the last 2 days. HCD here. Interesting. A little bit too small. I guess maybe they think they'll go up because people like mine are shutting down travel companies. So that's to the bull side. On the bearish side, I could look through and see if there's anything that's interesting. Person daily sell, I've got 102. How about with a weekly sell, I got 81. How about a trilogy sell? I got to work on that one, still 81. How about a weekly LCD and a PBS sell? I've got 38. My concern here is, do I really want to be shorting stocks here when I'm expecting a big bounce? And the answer is no. So I go top down like that. I also prepared, and perhaps I'll update my regular add-on to include these without the PBS signals. I gave this to the owners of the PBS. I like pullbacks and uptrends. So uptrend near free parking. There were 174 stocks that made that criteria. If I want to narrow it to mobile breakout in a squeeze, I get down to just a couple. And there's my friend Walmart, which showed up here again. I think Walmart looks very interesting here. And if we get a bounce, this thing could go up quite a bit. And if we continue to have coronavirus, I think it's going to do well in addition. I can look here, free parking, mobile breakout squeeze, Kahuna, down to 3. Cryoport, don't know anything about this stock. It's a logistics company, cold chain. sitting right on support in a squeeze, mobile breakout from a squeeze, new person buy signal, pocket pivot in Kahuna. I don't like the volume. Other than that, it's a pretty interesting looking stock. And I could take it down one further and add the PBS buy signal, of which I just got that one that's in a takeout. I think it's in a takeout. Let's see. Yeah, it's in a takeout. And I could look at here, just a squeeze and free parking. And maybe there's some things here that look good. See if anything looks interesting. Dollar General, I talked about it last week. It really didn't do much. It's got earnings this week, so you've got to be careful with it. Remember here, I'm looking at stocks that have in an uptrend, in a squeeze, and Booz Allen. So I'll do a number of these scans, and I did come up with a buy list, and I'm getting tired, and I'm not telling you a whole lot here that you can action on, so there's no reason to keep going forever. So let's just look at my buy watch list and see if there's anything I want to look at. 37 stocks. And again, if you haven't been here before, buy watch does not mean I'm going out and buying them. Buy watch means they get dumped into my TradeStation radar screen. They get dumped into my market watch on Thinkorswim with various signals, including Dr. K's seasonality, looking at 20, 40, 60 day. Awesome indicator. I'll give it to people that watch my videos for half off. Just give me a holler if you're interested. Very impressed with his work. And so I let my machines do the work, and I get alerts and signals when I need to pay attention. If I look at industry groups, can we see anything that makes sense? We have REITs. So I showed you healthcare trust. I also like medical property trust. Here's a stock in an uptrend, pull back to support, has a PBS buy signal that's new, strong market catcher. Couple of biotechs that I liked, of all things, Amgen. Look at Amgen pulling back to the 200, market catcher crossing zero. Might be too early, but something that I want to be watching. You want a cheap stop, two of them, Zynga. $7 stock, nice uptrend breaking out here. And then Turbine, APPS, Digital Turbine. Uptrend pull back to support. Looks like it wants to get ready to break out. I probably set the high above the high on Thursday. And anything else here that I'd point out to you? Renewable energy continues to look hot. I own some Enphase here. You can see it gave back some on Friday, but it's been a big runner. The other one that's really interesting in this group is Solar Edge. And then there's a Clearview or Clearview Energy here, Clearway Energy, sitting right on the 50. So those are the things I'm looking at. I looked at shorts, and I'm really afraid to give you shorts because I think this market's going to have a rip to the upside. I just don't know if it's Monday, is it Tuesday, is it Thursday? And I don't want you to load up on the shorts because it might go down a little bit further, get a 3% move, and then a 10% against you. So I'm not going to give you any shorts. Be careful, trade this market, realizing what I learned in 2008. There will be clear-cut signals when it's time to go all in. There will be clear-cut evidence that the risk to the downside is down. Think about March 8th or 10th of 2009. Everybody knew that the market was done going down, yet the market bottomed a few months earlier. If you had waited until March 9th or April 1st or even May 1st, you would have captured a huge rally. I lost a lot of money with the 2007, 8, 9 of getting in too early, getting stopped out, and then doing it over and over again. And what it taught me is don't jump at the first hint that you've got to move, but watch the markets and start to buy in, take half positions, perhaps quarter positions, and if they start to work for you, start to get bigger positions. The market's going to reverse, it's going to bounce, it's going to go higher, but it still may go lower before then. And the first bounce does not mean it's the last time going down. Have a safe week. Bye, everybody. Thank you.